So how did I manage to sell the top in 2021 and keep majority of my profits throughout 2022 and able to buy at the correct times? I'm going to show you in today's video with this free indicator. So to the people that have already subscribed to me in the past will probably know what I'm talking about. I've been using this since 2018. Different variation now, a brand new indicator utilizing a different metric. My name is Ash and welcome to the channel. If you're new around here, it would be nice if you can leave a like if you like what you're about to see. So why is this indicator good? It does two things. Preserve capital, allowing you to keep capital to make more money in the future. So preserve enough capital, make more money, right? Who doesn't want that? This indicator allows you to do two obvious things. Buy in key levels and most importantly, being in the right trend at the right time. I can show you in this indicator how to find these very, very easily by just using a very, very simple trick. And I will show you. It is pretty simple when you see it. There might be other indicators like this coming in the future based on the same philosophy. If you want to keep up to date and you want to see more of my analysis on Patreon, I do more on there. I do a lot more technical analysis and I also use this indicator a lot more there. This indicator though is 100% free. It's a free to use one. I will explain how to get it on your Tradingview. If you don't have a Tradingview, I suggest you get one. Go down to the link below, get a Tradingview account. You can do it on a free one as well. I do want to say though, before we start, this is not a 100% winning formula. It's not a kind of trick, gimmick kind of thing. It's using common sense with some analysis and some obvious probability, right? Not every indicator is going to work. There is a live market at play here. Back testing doesn't really matter in half the time. Forward testing. You've got to make sure that things are working for you in the right way, in the right manner, using analysis. We all know news, hacks, fundamental stuff happens and it moves the market. This indicator will tell you when to be in the market, when to be out the market in a more probability kind of fashion. However, not all coins will follow this suit if hype and fear is in the market, especially if they've been hyped up, especially if they've been hacked for obvious reasons, right? So let's get onto the screen now. A disclaimer, not financial advice. As I've just said before, things can happen. I've been using this for over 5 years now in terms of the obvious of what it is, dominance. Now this is a different variation where you can utilize it in a very, very interesting way, utilizing the most common pairs, stable coins. So let's get into it pretty quickly. If you go onto the link below, I have put a link. However, if you just go into the indicators and search simple dominance momentum indicator by myself, you can be able to get onto it. Credit goes to Jamie for making this. There's a link to his profile within the indicator itself, or if you want to just get in my community, you'll probably see him in there. He knows his stuff. Anyways, let's talk about it in terms of simple dominance indicators. Right. When it gets added to your screen, it will look like that. Very, very simple. You're probably thinking it's a lot of lines like an oscillator. It is. And there's some golden rules that you need to be aware of. Now, if you double click onto it, stable dominance, dominance of the EMA and the EMA trend. The EMA overall trend is 55 and the current kind of EMA. You can set these to whatever the hell you want, really. However, I like to remove this. I only like to have one EMA on mine. I also like to put it at the top as well, just because it's better. Now, when you are on USDT or USDC, whatever, it will work in terms of the stable currency dominance. However, if you go down to a BTC pair like BNB BTC, it will show the BTC dominance. You get the idea? Cool. Again, if you go into the Ethereum pairs, you can see the Ethereum dominance at the top. So it's wonderful, right? That alone is like a tick in the box. So you don't have to have multiple little charts, right? So before we start, I need to talk about the main rules. When it is going down, it is good for the market. When it is going up, it is bad for the market. Why? Because it's utilizing dominance, money flow essentially, right? Stable currency dominance. Higher it is, the lower the price. Why? Because more percentage of assets at the time is in stable currencies, right? Likewise, if it's down by 5%, it would indicate where's that money gone? Well, why is the market moving? Why is one trending up, one trending down? Money flow, right? Getting in the market at the right time and understanding being in the market at the right time and being able to sell at the right time is a perfect thing. Likewise, the exact same on BTC. BTC is an interesting one, right? You don't have to do this as a metric in terms of buying in BTC, but if you've noticed something with BTC dominance at its high and your Satoshis are really low in value, cool, right? There's an opportunity there to make money. If you've been buying altcoins in USD, that's fine, right? However, if you then come to this indicator and go, wow, my Satoshis are right through the roof, BTC dominance is absolutely plummeting because altcoins are going over and beyond what the BTC is doing, guess what? You're going to grow Satoshis, right? Imagine it. Simple metric here. If you put one BTC in here, right, just random, and let's just say Avalanche does go back up to these levels, you can make an extra 2-3 BTC just by sitting in it and not realizing it. Yeah, you'll make dollars as well, but you may have actually made more BTC in valuation terms, right? So that's a core principle, right? Now to show you the sneaky little tricks that make it even better, right? Let's talk about USD pairs. I want to focus mainly on them, right? Now, common sense will tell you certain things. Buy low, sell high. Same with everything. But being at the market in the right time is fundamentally important, right? Let's look at the history of me, right? I don't want to have a big head or anything, but I've just put a few tweets out saying when I've been buying and selling through my Twitter. I've been showing these on Patreon as well, all kinds of stuff in terms of my journal, right? And this is a core principle of why I got out of the market when I got in the market and stuff like that, right? It's straightforward. Now, I recommend personally, I recommend this, the higher time frames, the 2-day, the 3-day, the weekly time frame. This is really, really effective if you're an investor, right? So when we look at BTC, right, and we're looking at these, so we'll look at the previous top, right? So this was the previous run, okay? Dominance, you can see here we're at 5.8% and it was just trickling down. Now, you're not really that fussed mainly about the EMA, but the EMA does help you stay in for longer. But what you notice is if you are further away from any moving average and you pull back towards it, that's a great time to look at things, right? So when you start looking at this, when this is really high, well, things are going to be really low, and it happens everywhere. Obviously, you can see how we're ramping up, right? What I said before, up is a different situation for going down in this indicator, right? So obviously, you can see how things change. Now, look at this. We were 12,000, we dipped all the way down to like roughly 9,000, give or take, and we pushed up, and then obviously we melted, and then boom, all of a sudden, the market started to ramp. It started to ramp. So we went from all the way at 5 point whatever, down to 2.58%. Obviously, the market's changed a lot, but the same metrics do happen. You can see here, when we are far away from this EMA, we're at tops. Far away, top. Far away, top. Obviously, every time we bounce back, you can see what's happened. Obviously, changed the situation here. We've melted. This was a horrible dump, if you remember it. We started to show change of structure. Probably a good time to get out of the market. And realistically, even on this time frame, you're getting out of the market at a really good time. You could have reaccumulated quite low, beautiful levels, which is luckily what I did at the time. Now, moving on to the other bit, you can see again, look at how high we were here. We were all the way up at 7%. Obviously, the markets grew. Bottom. There's 3 indications here of a potential bottom. Further away from the EMA, the better it is, right? You are looking at trend strength, right? And when you are further away from it, it is good. Now, this is why a lot of people like to use a crossover method. If you put a crossover on there, you can get in and out a bit earlier, right? Personally, I don't like to do that. I like to just look at trends anyways and see where the momentum's going. You can see that in terms of what's happening here and obviously what's happening here. You can't just look at one. You've got to look at multiple things. Said it before in the previous intro, you may well find that a coin's hyped up to oblivion. It may not even follow this, right? So you got to look at that individual asset to difference. You've got to look at both, right? Anyways, moving on. Obviously, we melted, and guess what happened? Now, this is where it got interesting. Obviously, you can see where this market was. Now, I was getting out of the market, roughly around this sort of point. October time, November time, and mainly in December and January, I was getting out the market. And everyone was like, why are you getting out of the market? Because I want to, because I made too much money and my indicators are telling me I want to get out. And this was an interesting point, right? We were really low at these points here. That was massive when you think about it, right? But also for me as well, not to be big-headed, but I was in the market early. And when you look at your portfolio, like, whoa, I've made a bit of money here. I can protect that. Whole element of it, protecting your capital. Capital preservation in a bear market or going into a bear market, into a transition, is massive. The goal is to keep it as long as possible, right? If you're in my Patreon, you'll know this, my journal, going from 80% stables all the way down to 20% recently in terms of into January, and then put my final bit in very, very, like literally in that January, February sort of time period, right? And everyone's like, what? Why are you doing that? What happened to the market since? Well, we've been going up because the metrics are telling us that the stable currency dominance is falling, right? Because it was already really high for a long period of time. So when we look at this, look at the market, right? We've been just melting, just going up and up and up. You know, everything's just been melting. We've had one relief rally here, which, let's be fair, a nice little deviation. But other than that, nothing was really shouting at you and telling you, well, actually, we should be getting back in the market until you're hitting stupid high, really obvious levels of 15% dominance. Because when you look and analyze these, that was a first dip around 18%, 17%, whatever, right? Give or take. And then all the way across these, all these little spikes here, consolidation. Obviously, we melted it even on the FTX kind of dump. I was buying all these little spike points because it was like, that's high dominance, right? All I've done is translated what I've been doing for years with the BTC dominance, but into USD because I've just been using that as primary assets, right? And then when you start looking at the fact of, wow, we're at 15%, we're at these floors, and everyone's like too fearful to buy, I was like, I'm buying this. What's happened? We've went from 15% all the way down to roughly 10.23 now, and the market has moved up massively. Now, this doesn't mean that the bottom's fully in. It's a high probability chance that it is. But the reality is, you need to look at these indicators. These indicators are telling us something, and it's a simple story of money flow, and you've got to understand it, right? So the trick is, buy as far away from those trend moving averages as possible, but also follow the trend, right? You can change this plot if you wanted to. If you wanted to make it a little bit easier to kind of look at, you can maybe go with the 89, for example, just to give it a bit more weight. But for me, 55 works very nice. Now, this is the higher time frames, right? Obviously, higher time frames, multiple elements around this on the 2-day time frame. Even on the 3-day time frame, you can look at the market and thinking, wow, I could have sold here. And I didn't really have to buy until I saw a breaker structure on this side. By the way, breaker structure is not this deviation here because we didn't break structure. This is a breaker structure. We've broken this level here. I know it's probably struggling to see. We've broken this structure, and then obviously what's happened here? We've been melting, right? Boom, right? You're literally buying around this 12% mark. What's happened since? Gone up. Continued to go up. What about altcoins though? Let's look at Polkadot. Polkadot, great example. Look at this level here. Getting out on the 3-day time frame. Again, on the 2-day time frame, you could be getting out about $40, $40, $35. It went down to $6, right? Buy low, sell high. Same on the way up. Look at the way up, right? All the way up at these levels, right? Crazy levels, massive dip, thinking, wow. And this is why we talk about key levels. Buy key levels, buy structure. If the confluence is telling you that we're far away and we're doing certain things on the dominance, and then you've got a key level of support, buy it, right? Realistically, because you're going to get a relief at some point. Now, be careful with those. You don't want to buy the dip that keeps on dipping. Obviously, this turned around, but this could have carried on going up. But realistically, you're still getting fair value because you'll be able to buy it low versus aping in at the wrong time. Basically, aping in when it's going to the moon, and as this is literally been melting and dropping and dropping and dropping to stupid levels, and you've already missed half the move, right? Being in the market at the right time, being out of the market at the right time is perfect, right? So what does it mean by making more money? Well, if you've got capital, because you preserved it and you've kept it and you've understood what you need to do, there's reasons why you should be in the market and not. Said it before, buying the dip that keeps on dipping. No one wants to do that. You want to buy when people are fearful, when things are dropping, when things are going crazy in dominance to the upside, for obvious reasons, where people are panicking. When you start looking at all these kind of levels, if I just remove the noise here, you can see here very, very clearly, like look at where DOT was. All the way through this consolidation period, every single dip it had a spike. Again, nice little spike to the upside here, but realistically, there was no breaker structure. There's no way for you to ape into that just yet until it got to these levels, right? Look at this for an order down here, right, where we're spiking right to this upside. But then we broke above this level here for the first time, held a support as we were melting lower, and we're starting to break structure down here as well. Now look at where we are. So it's all about timing. Buying those key levels and buying where dominance is changing is hugely important, right? What about for a trader? Final bit I want to talk about realistically, right? So you got to think longer term, zooming out. What is the dominance doing? Is it going up? Is it going down? Why you should be in the market? Why you shouldn't be, right? If you're on like the 6-hour time frame, for example, looking at certain things, it also works. It's not as clear, but it also works. You can see here, as dominance is rising here, Polkadot is dropping, right? And likewise, you can see how dominance is dropping and Polkadot is rising. if you're looking for retests, if you're looking for certain situations, you can look at certain things. Now, obviously, yes, you can change what EMAs you're using to make it better. You can use a potential crossover strategy if you want to. There's all kinds of variations. The idea is for you to read that in the correct manner to make as much money as you possibly can by following the market, right? Following it. Do not get caught on the wrong side of the market because you can get destroyed. Absolutely. It's all about risk management. It's all about like following it, not following it, buying back in when it's low, and then being able to be happy with that decision. I trust this system more than anything. I have done for 5 years, as I mentioned before. And you can see how in certain markets, it's very, very clear to me. Look at that. Dominance is just dropping like a stone and the market's rising. It's just growing. And, there's no reason for you to get out of that until that crosses over to the, you could literally follow this as simple as it is, where when you're below the EMA, you buy, right? You sell when you close above it for the first time. It sounds really obvious, but that's kind of what you're looking at doing with the entire market, even if you're a long-term investor, even if you're a trader. Now let's look at probably the lower low. I've never really tested it for real. I have done little swing trades on it in the past on the 6-hour time frame, and it does work. But going down to the 1 hour time frame is probably going to get more and more sketchy. But the reality is, on a trending market, this will work because it's showing you where money's going and where the panic is. Remember, USD markets move with Bitcoin. If Bitcoin's strong and bullish and green, you're going to make money anyway. So you got to wait for that variation. If the market's a bit dull and boring, as what we've seen in the past here, like this sort of period, it's going to be a bit wishy-washy like any trending market or any indicator realistically. But when you're looking at the lower time frames, when we have got a genuine move and a genuine trend, it will work. So as I say, lower time frames, not the greatest. Maybe scalping could be very, very interesting on it. But as I say, you could get very, very, look, I mean, it's very, very hard to read in certain situations. Yes, if you're well below it and you're looking at it, yeah, cool. But when you're like this, it's like proper chop mode. Very, very hard to read. So I hope this has explained to people what I look for. I've basically just laid it all out and went, this is what I do. Able to get out the market at the right times, being able to get back in the market at the right time, keeping that capital. I know a lot of people when I was selling back in 2021 were not very happy with me. I understand that. But this is the reason why. I did explain it in the time what I was looking at. I just didn't have an indicator to show you. Realistically, I have had it as a manual kind of process on the panes on Tradingview, but it's not very easy for people to implement. Now this is a button click. So if you did like this, leave a like, please. And yeah, if you want to see more content like this, hit the subscribe button. I will see you again very, very soon.